All right, well, welcome everyone to tonight's class. Tonight we're going to focus on day and swing trading. I'm going to take you through my approach. I'll show you how I measure performance. We're going to look at lots of examples of not only stocks that I traded in the last little while, mostly today, but also just how we can sort of think about longer term performance in the market. And I'm going to go through my strategy. So on screen here, you have the sort of itinerary. We're not going to necessarily do it in this order. But we'll talk about trading basics, just some of the basic concepts behind my approach to the market and why it works. I will walk you through my 7-day and swing trading strategies, just give you a basic overview of each, give you a sense of when you would do it, how much time it takes, and show you some examples of those as well. As we go through that, as I said, I'll have a number of examples of some recent trades. I've tried to include mostly trades from today, but there may be some from this past week. We're going to talk about measuring performance to have the right trading mindset. And this is something that I think a lot of people overlook, but it's extremely important and helpful to have a certain kind of mindset where you're really thinking in terms of the risk-reward trade-off, and we'll talk about that. I will show you the tools that I've developed that give me an edge and can give you an edge if you are one of my active trader members of Stockscores. I'll talk about the services I offer, how I can help you, coach you through the process to get you to the point where you can trade effectively. And then at the end, we're going to do something fun. I'm going to show you a very simple, unique approach to where you can get to $100,000 a month. We'll talk about how much capital it takes and the process to get there. And it's really about having a mindset. I'm going to show you a little spreadsheet that I think is fun. So we'll do that at the end and sort of save the best to last. All right, so let's get into tonight's presentation. So I want to talk a little bit about just some basic knowledge so you can understand my trading strategies. And we'll first begin with the difference between day and swing trading. So when I talk about day trading, what I really mean is being in and out of a trade within a day. So, buy at 9 o'clock or 10 o'clock and be out maybe 2 hours later. Sometimes in and out within 3 or 4 minutes, sometimes hours. It really depends on the strategy and how the stock is trading. Swing trading is where we actually hold the stock overnight, but not typically more than 2 weeks. So it's 2 days to 2 weeks, let's say. And for swing trades, typically it's more like 2 to 5 days, maybe 6 days, using the strategies that I'll touch on tonight. We're going to look at a couple of swing trading strategies. We're going to look at a couple, well, actually 4 or 5 day trading strategies that I use every day. These are things that I've been developing over the last 35 years of my trading career. I've been sitting in a chair in front of a computer that long, and I've got a lot of experience. I've made every mistake in the book. I can really help you get on the path to success from, just the experience that I've had and the tools I've created. I don't really use other people's indicators or algorithms. I've created all my own. My feeling is if you do what everyone is doing, you're going to get what everyone gets, and that tends to be average. I want to beat the market. I want to have an edge, and so I've created my own tools, and we'll talk about that tonight. So let's look at a couple of examples of day trades. This is one from today, and this is a stock that's been a pretty good day trader over the last week or so, but it was alive again today. And, you can see on this particular chart, this is a 1-minute chart. You can see here in the, This is a 1-minute chart. You can see there it says 1 minute. You can see also up here it says 1 minute. What that means is that each one of these bars here, these are price bars called candlesticks. When they're green, the price is moving up over that 1 minute. When they're red, price is moving down over the 1 minute. And here we have volume. And this is time from left to right. So this starts way in the pre-market over here at 4:30 in the morning Eastern time, but for most of us, we're trading normal market hours, which of course is at 9:30, and the stock came alive early in the day and it was trading abnormal volume, and it had some patterns in here. You can see on this chart, there's little pink and yellow dots and blue dots, and those all have a meaning. Those are all my indicators that I've created and that I share with my students. I will explain what they are a little later, but they're very important to picking stocks, picking entry points, and knowing when to buy, when to sell. So that is a day trade from today. Now we can take that same stock, which has been hot for about 3 or 4 days, and here you can see that it started its move, again with the pink and yellow dot, back on March 24th. Now these price bars are 13-minute bars. So they're telling us what happened over a 13-minute interval. You're probably wondering why 13 minutes. And the reason I use 13-minute bars is because there are 30 13-minute bars in a day. And so I just like the symmetry of it. I used to use 15-minute candles, but I just found 13-minute bars sort of got me in a little quicker on a swing trade. And again, I like the symmetry of it, where there are 30 13-minute candles in a day. Now, what's important with this example is the stock started its move here on the 24th in the morning. It was a little under $5 and it hit $20, 1969, a day and a half later. So swing trading can have big gains as well. And sometimes they play out over multiple days. And sometimes we'll have multiple entries. You know, this is a strategy right here called a simple swing, Stockscores simple swing. And then we have another one here called an alpha echo. And I'll talk about those as we go through the presentation. All right, so let's talk a little bit about how I came to figure out how to trade the market. When I started trading 35 years ago, there really weren't books about day trading because you didn't even have electronic brokerages back when I started. I used to have to pick up a phone and call a broker and make a trade. And back then, the only real sort of short-term active trading was in the futures market. And I traded the futures for a little while, traded the S&P 500 futures and some of the commodity futures. But I really started to gravitate towards stocks. And as the internet became popular, all of a sudden we could start trading electronically. And that really changed the game. But when the early days, when I was, in my early 20s, late teens, I used to go down to the stock exchange where I lived, which is in Calgary, Alberta, the Alberta Stock Exchange. And I would go there because they had real-time quotes in computers that you could use. There was 3 terminals set up, and there was 20 of us that hung around and used these real-time quote terminals outside the stock exchange. And what I used to do was look for stocks that were behaving abnormally, which is still what I do today. I do it a lot more sophisticated now, but back then I would go onto these quote terminals where they had real-time price quotes, and I would look at the big movers of the day, up or down, and I would write down the symbols, and then I would race home. I would download stock chart data into my computer, and we had to do one chart at a time. There wasn't, websites where you could get stock charts, believe it or not. We had the software programs, but we'd have to download the data. So I download the data, it would take like a minute for each stock, and then I'd be able to look at a chart, and I started looking for the patterns and that sort of thing. And, that's still what I do today, but except now the process is in like seconds, whereas back then it took hours because I had to go to the stock exchange, get the quotes, go home, download the charts, look at the chart patterns, look for the breaks, the patterns I had learned to figure out and do. And that's, essentially the genesis of how I started trading. So in my first few years, I traded on fundamentals and doing the things that you learn about in your finance textbooks in university. I learned very quickly that that didn't really work for short-term trading. So I moved towards a technical approach where I looked at charts. And along the way, I developed my own indicators. I had programmers write those indicators. I had, websites built. I spent a lot of money building tools to give me that edge in the market. And I'll talk about, the things that I've built tonight and how you can take advantage of those as well. So that's sort of how I reverse engineered the market, starting with looking at stocks that had already done well, studying their patterns, and then applying those pattern recognition to stocks that were moving up. So here's an example of a stock where we are reverse engineering. So what I learned when I was doing that reverse engineering process, looking for, the stocks that had done really well, what I would say is, okay, this stock went from 60 cents to $1.30, and it did so in a couple hours. So then I would ask myself, well, what started it? And I can see here that there was, a pickup in price right there, and there was a gain in price right there. And of course, over the last 2 classes that we've done this week, Tuesday's class, we talked about chart patterns. Wednesday's class, we talked about investing. And of course, those videos are on the Stockscores YouTube channel now. But, so I thought, well, there's this low volatility here, and then there's this break. And I would see this over and over and over again. And we're going to go through lots of examples tonight And you will see over and over again, it's these low volatility and then a break from low volatility with abnormal activity, and then the stocks would go up quite significantly. And so I started to build a strategy around that. And then I built my own indicators, which are these little yellow and pink dots. Those are called action candles. And an action candle is an indicator that I created which looks for statistically significant abnormal price and volume activity. And so we use the computer to go through every stock that trades with decent volume in North America, looking for stocks that are behaving abnormally, because I know that where stocks start to behave abnormally from low volatility, they will often move in upward trends. Now, it doesn't always work, but it works often enough that you can make money from it. And so if I've got a set of rules where 70% of the time buying here leads to an upward move, and 30% of the time it leads to a small downward move, where this is my loss if I'm wrong, and this is my profit if I'm right, and this is 70% of the time, and this is 30% of the time, then you start to get a sense of how you can make money consistently in the market. And we're going to go through the economics of it. Again, at the end of the presentation, I will show you the path to $100,000 a month. And it doesn't even have to stop there, as you'll see from this spreadsheet that I'm going to show you. So what is the most important factor for picking hot stocks? So way back 35 years ago, 30 years ago, when I started out in the market, when I was hanging out at the Alberta Stock Exchange, when I was, my friends would go out to the nightclub and I was at home looking at stock charts, what was the most important factor back then? And today it's the exact same thing. It's abnormal activity. If you want to beat the market, if you want to pick the stocks that make the biggest moves, you have to focus on what I call alpha stocks. So these are the stocks that are leading the pack. These are the stocks that are trading on some news, trading on their own story, and they're disconnecting from their overall correlation to the market. Most stocks, most of the time, sort of trade with what the market does. Market goes up, most stocks go up. Market goes down, most stocks go down. But some stocks make much bigger moves to the upside and sometimes to the downside. And those stocks are doing that because they're trading on some new information that's coming to the market and has investors very excited. And then what you get is this feeding frenzy where you have the crowd chasing after a stock, particularly stocks that don't have many shares outstanding, which we call low float stocks. They chase after these stocks. They all, you might have tens of thousands of traders all trying to buy a stock that only has 1 million shares outstanding. And now you can start to understand how a stock can go from $3 to $20 in a day, and it does happen, and do so with huge amounts of volume. So these are called alpha stocks. And the footprints of alpha are abnormal volume and abnormal price activity. Now we can define that abnormality mathematically. And so these indicators that I've created use statistical analysis to look for statistically significant abnormal price action and abnormal volume. And that concept is something that I learned in my 4th year of university when I was at the University of Calgary. So I was, early 20s. And we were studying mergers and acquisitions in the 80s. You had these big deals where companies like Nabisco and RJ Reynolds would merge. And when one company would buy another, there was typically a big price premium paid for the company that was being bought. So you might have a company that was trading at $10 a share. Another company says, we want to buy you. We're going to pay $20 a share to buy the whole company. And of course, if you knew that was coming, you could buy the stock at $10 before the news came out. And then when the news comes out, the stock jumps up to 20 and you could make a big profit. So what we studied in this class was whether there was evidence of insider trading before the big news came out. And we did this using statistical analysis. We looked at the trading activity of stocks before big news announcements that had the stock jump up huge in price. And we found almost always in these big deals, there was statistically significant abnormal buying before the big news. So let's say in the 2 weeks leading up to the big announcement, you would see this noticeable, statistically significant trading activity. And I then took that and said, okay, that means that some people have better information than others. The stock market isn't fair. Those are concepts we talked about in last night's class. And so I started to apply that to shorter term trading in penny stocks mostly, because back then I didn't have a lot of money, so I traded mostly penny stocks. And same thing happened. You would see big announcements, but in anticipation of the big announcements, the stock would move up before the news came out. Why? Because some people had better information than others. And so that was the genesis of these algorithms that I use, 25, 30 years later. It's all based on that class that I took in university, which was a fourth year finance class. And I've adapted it quite a bit over the years and built tools to find them. I have tools now that sweep the entire market looking for abnormal activity. Now, in one of the emails I sent out this past week, I showed a picture from the New York Times of me on the floor of the Alberta Stock Exchange. And in that picture, you see a bunch of guys behind me. So one of those guys was one of the programmers that started to develop that. But what's interesting is when I started to trade like this, I caught the attention of the Alberta Securities Commission. They could see that I was making all these trades before big news announcements came out. And I actually got called down to the surveillance department at the Alberta Stock Exchange because they're like, how do you know about these stocks before the news comes out? And I explained to them what I was doing. I was using algorithms. And of course, this is 30 years ago. Nobody really used algorithms, or very few people did. And so I told the fellow who ran surveillance at the Alberta Stock Exchange, his name was Tim Daly, and he kind of laughed and he said, you know what, that's exactly how we look for insider trading. We look for people that are doing abnormal things using math. And that was, kind of a funny little story around how what I was doing was also what the surveillance operations at a stock exchange was doing. And it really sort of emboldened my approach to the market because I knew there was something to it. So anyway, today I still do the same thing, but it's much quicker, much more sophisticated. Computers are much more powerful today, and we can do it very quickly. So that's the most important factor for picking stocks. Now, the next thing, and here you see it, here's the abnormal activity from today on this particular stock. So it was kind of boring. And then it came alive with abnormal activity. It came alive with abnormal price action. All of these pink dots indicate abnormal price action. And so you see lots of them there. Now, not all of the pink dots are important. We'll talk a little bit more about when they are important as I go through tonight. But what's important is that you can see the crowd coming into the stock. These are 1 minute bars. And on each of these 1 minute bars, this stock was trading 1,500, 2,000 trades, not shares, 1,500 to 2,000 trades every minute. So it was very actively traded and generating a lot of action. All right, so what is the most important factor for successful trading? So I talked about the most important factor for picking hot stocks, and that is abnormal activity, but that's not what makes you a successful trader. That's just one piece of it. The thing that really sets apart great traders from the not so great is the ability to follow a strategy, to have the discipline, the focus, to follow the rules. And you might say, well, that's easy. I could write down the rules for a strategy that I know is very effective. I could write it on a napkin. I could hand it to 20 people, and most people wouldn't be able to succeed with it. And the reason is that most people, if they're normal, have an emotional attachment to money. And that emotional attachment to money causes people to make mistakes, causes people to not sell when they've been told by the market that they're wrong. So they take big losses instead of taking small losses. We talked about that last night. They have FOMO, the fear of missing out. So they don't take great setups. They take setups where they are worried that they're missing out on an opportunity. They chase stocks higher. And those two things, the fear of missing out and the inability to take a loss when the market proves them wrong, are the great downfalls of most traders. And so the key thing, if you want to be successful in the market, yes, you need a great strategy. I can give that to you. And yes, you need to have good tools. I can provide those as well. But if you don't have the discipline to follow the rules, to take your time in learning, you will never be successful in the market. Now, I'm going to give you a roadmap at the end of this presentation on how someone can get from zero profit in the market to $100,000 a month or more using a very mechanical, methodical approach. And you will see that it makes a lot of sense how you get there. But I want to stress right now, You have to have discipline, you have to have focus, you have to have emotional control. All right, so let's look at another chart here. You have to have a plan. And one of the things that I provide for people is a plan. It's a plan that I've developed over the last 35 years of trading. I've been teaching for about 25 years. And my plan revolves around indicators like these little pink and yellow dots, which we call an action candle, and these lines here, which are called risk-reward lines. And I'm very mechanical about it. So we have a strategy entry right here on a strategy I have called an intraday pullback. So the buy point was today at just before 10:13 a.m. at a price of $14.36. The stop loss point was at $13.15. And then these lines here are multiples of risk. And so each line represents a risk-reward trade-off. And what we do with these lines is use them to sell. So when a stock closes above one of these lines, we have our exit point at the line below. So we close above a line, our exit point is at the line below. Close above a line, exit points here. Close above a line, exit points here, and right here is where we sell. So that's a mechanical, methodical approach based on rules, based on indicators, looking at the right stocks. We have to trade the right stocks. I have tools to help you find the right stocks. And then we have rules for when to buy using these indicators, and we have rules for when to sell using these reward for risk lines. Now, these lines are applied in different ways for different strategies. What I've just shown you is how you apply it for a particular strategy called an intraday pullback, which I'll talk about in a moment. But the key thing about having this mechanical approach is it helps take the emotion of trading out. You know, our enemy isn't the market. Our enemy isn't other traders. Our enemy is ourselves. Trust me, the hardest thing to do in the market is overcome yourself. And having a mechanical trading plan is going to help you do that. Here is the same thing for swing trading. And again, we're using these indicators here. That's a little pink and yellow dot. And we apply these risk reward lines and we use that to exit. So we can apply it to day trades, to swing trades. On this MLGO, there was it's called a Stockscores simple entry in here. And there was an alpha echo here. Today's alpha echo wasn't ideal, but I needed an example, so I showed this one. It went up until it hit this high here, and then it got stuck, which we often expect will happen. But you can see that in risk-reward terms, it went up 1 times risk, 2 times risk, 3 times risk, 4. It hit 5. If you get out here at 3 or 4, that means you made 3 or 4 times your risk. This is very, very important. I'm going to elaborate on this later, but I've talked about having the right mindset for trading the market. And the right mindset revolves around thinking in risk-reward terms, not thinking about, I want to make $100,000 a month, but instead thinking about, I want to make 100 times my risk in a month. So if my risk is $1,000 and through the month, I can accumulate a 100 reward for risk number, then I've taken 100 times that risk, $100,000. If I'm risking $50 a trade and I make 100 times risk in a month, that means I've made $5,000. No, yes, $5,000. Okay, so we're going to go through that mindset as we go through the presentation. So my approach is strategy-based trading. I don't trade on gut feel. I don't trade on tips. I don't trade on news. I don't trade on what I hear on TV or read about in the newspaper or on the internet. I trade based on algorithms that I use to identify trades. I started doing that 25, 30 years ago, and then I created a more sophisticated system for that 9 years ago. I sort of had a midlife retirement, I guess. I sold my house and I moved my family to Maui, lived on the beach in Kapalua Bay, and I just started developing this computer algorithm. And after 6 months in Maui, I moved back to Canada, moved to a place called Whistler where I skied and mountain biked for another 6 months, continuing to refine these algorithms and these computer programs to identify trades. And that's now the basis of what I do these days and what I can teach you and provide for you in my tools. The aim is to minimize human judgment. We want to make trading decisions based on rules, not emotion, because remember, our enemy is ourselves. So these algorithms and processes are about 8, well, it's more like 9 years now in development, but they're based on my 35 years of trading experience. And it's odd, but it's true. What I did 30 years ago is not a lot different than what I do today. What's different is how fast it is now, how much more computerized it is now, but it's still based on basics around human emotion. And that is fear, greed, and the stock market isn't fair. Those three things are what drive my trading strategies today, what they drove them 10 years ago, 20 years ago, 30 years ago. Fear, greed, and the stock market isn't fair. Some people get better information than others. We can use computers to identify when they're acting in the market and take advantage of the message that they're giving us. So what I've created is one of these, we'll call my active live dashboard. Now there's a lot of data on here. You're probably looking at this going, I don't understand any of this, and I don't blame you. It's a little overwhelming at first, but I'm going to go through this screen tonight and just explain what some of these things do. For now, just know that this is a program called TradeStation. I have nothing to do with TradeStation. They don't pay me. In fact, I pay them to use their platform, but it's a powerful program because it allows me to create and code my own indicators, so I don't have to use what everyone else is using. And through that, I can monitor the entire stock market, looking for the things that my algorithm looks for. And as I said, as we go through this, I'll explain what some of these windows do. This one here is for swing trading. This is a window for early day trade entries. This one is for some of my favorite stocks, these low float stocks. We'll go through this as I go through tonight. I sit in front of my trading desk. This is my desk, which if you're watching this as a video, you see that behind me here. And this is where I sit all day. There's two different computers running this. The big screens at the top are 43-inch LG 4K monitors. And then I've got 4 HD monitors underneath that. This particular one right here is my dashboard. It looks the same as the screen I just showed you. And that is powering my daily webinar where I have my algorithms running for my students and subscribers to watch. And we're all watching the same thing. And then I'm looking at lots of charts over here, and my main charting screen is there. I've got more algorithms running here. So I've got lots of different tools in front of me. I want to stress, when you start out trading, you don't need to go out and buy a big fancy computer with all these screens. I can travel and trade from my laptop from one screen. But I also run webinars. I talk to my students through the day. I need a little more to be able to do that. And also, having lots of screens means that I don't have to flip around on my computer so much. I can just put all the stocks that I'm watching on screens in front of me. When I'm on my laptop, I got to flip through the charts every minute or two, looking for the different setups. So yes, you can trade on one screen. You don't have to go out and buy a bunch of computer equipment. In fact, I suggest you don't. Learn how to trade and manage emotions first. And then once you start getting profitable, then you can start setting up big trading computers. And that's something I can help my students with. All right, so here is another stock from today. This is a stock that was triggered on the dashboard. Why was it triggered? Well, it was boring. Same thing we talked about last night when we were looking at investing strategies. We like boring and then abnormal from boring. And that's why it hit my screen. And then you see here a little blue dot. That's called an early riser candle. And you see here an action candle. The pink one is called a message candle. The pink and yellow is called an action candle. And I make those indicators available to my students as part of their package that they get from me. Now, I've spent many years and thousands of dollars having these indicators programmed, testing lots of things, and most of what I create I end up throwing out because they don't work well enough. But these are the ones that have stood the test of time. These pink and yellow dots and the blue dots, they're really the core of what I do. And it kind of is that simple, where I'm just, trading based on little dots on a screen and looking for my indicators to trigger. When they do, I assess the pattern and determine whether the pattern is right. And most of the pink and yellow dots are not trades, by the way. It's only certain ones that matter. And in this particular case, this one matters and this one matters, but these don't, because they're not breaking from low volatility. So my strategies, which we're going to go through tonight, and sort of my process, is each morning I have a little pre-market assessment. Is the market helping or hindering me? In the last couple of months, the market has been hindering because we've been on a bit of a pullback, and the talk of tariffs and trade wars has certainly taken some of the confidence out of the market. But despite that, still every day there's something to trade. Today there was 3 or 4 good trades. Yesterday was a pretty quiet day. We only had maybe 1, but most days there's at least 3 and sometimes 10. And whether the market's going up or down, there's always something happening. So I do strategy-based trading. We are going to go through these strategies here tonight. And I'll just give you a quick overview of each. I'm not going to teach you the specific rules of each because that's reserved for my students that take my active trader membership at Stockscores. But our goal again is to minimize human judgment. And what I want to do is help you get on the path to understanding how these things work and hopefully get you on the path towards prosperity in the market. So the first one that we'll talk about is the Stockscores early riser. Now this particular strategy, most of the signals come in the opening, normally I would say the opening hour of the trading day, but now we can apply this in the pre-market as well. There's a pre-market trading session from 4 a.m. Eastern time until the market opens at 9:30. Most of the action comes between 7 Eastern time and 9:30. And then we can do this strategy all day long, but it's a great strategy for people that can get up early, hence the name, early riser. And so for those on the East Coast or for those in Europe where you can trade the market, which for me is at 4 in the morning, but for you might be 2 in the afternoon, this is a great strategy. It works really well. And the idea here is we are looking for stocks that come alive. And so we watch them here on this screen. Let me do that in yellow. So on this, So on this screen right here, I meant to do that yellow. We are watching, got a little blip in my screen, there we go. So that screen right there, we're watching these stocks make what we call early riser signals. Now we also watch for early risers from this list right here and also from this list. So these 2 lists we're monitoring, and when a stock is behaving abnormally, comes alive, and then makes this little blue dot. See, there's a little blue dot there. There's one here too, but that one wasn't strong enough. So this little blue dot right here was the early riser signal on MLGO this morning. And that came around, I think it was 10:13. Wasn't the perfect setup. I was a little shy about it because the pullback wasn't very far, but it met the rules. Blue dot, stock went up, pulled back, broke the pullback, buy here, support here, stop loss at the red line, and you can see it made a nice move out of that. Now again, what I want you to notice is how many lines it moved through. Okay, because this is part of this mindset that I want you to get around. If my risk is this much and my reward is 1 times risk, 2 times risk, 3 times, 4 times, 5 times, let's say I sold here at 4, which is, where the sell signal was. Yes, it went up higher later, but the sell signal was actually here at +4. So I want you to just remember that this particular trade made 4 times risk, 4 RR. That means if you risked $100 on this trade, you made $400. If you risked $1,000 on this trade, you made $4,000. All right, so keep that in mind because I'm going to show you something later on the power of using this thinking around reward for risk. Now, the next strategy we'll look at is something similar, but it tends to come a little later in the morning. So this one is typically more after the market opens, say between 10 o'clock and, well, they happen all day actually, but you'll get quite a few between 10 and 12. And so for the person where that fits with their schedule, it's a good one. And we're going to use the IPB finder. So you see right here, IPB Trader Finder in our active live screen. So let me show you that. We can also use my indicators in TradeStation to find these. Here is the IPB screen down here. And it actually will calculate when a stock triggers a particular signal for the IPBs. So the last one of the day, actually the last one at the time I did this, I built this presentation this morning around midday. So the last one that came up was DRCT had a trigger at 2:14. That's Eastern time. Its first trigger was at 12:28, and it did another one at 1:50 and another one at 2 o'clock. But there's the first one. All right. So here's an automated system that will give you the alerts. Now, of these, most of them I never trade, but they're signals to tell me to look at the stock. So I get a signal, I go look at the chart, I apply the rules, and I decide yes or no. That process takes 5 seconds. So if we get an alert, we look at the chart, it takes a second or two to bring up the chart, we inspect the chart, that takes 2 or 3 seconds, and then we decide if we're going to take the trade. So relatively straightforward. Here's an example. This one happened today. You can see the stock started to trade abnormally, so now we know it's alpha. It's moving up strong, and it makes a message candle right there that breaks a 2 inflection point pullback. And we talked about inflection points last night and on Tuesday during that class. Essentially, an inflection point is a peak. Anywhere you see these red crosses, those are peaks and these are valleys. Okay, so those are inflection points. So I draw a line across those inflection points. I break the inflection points with my action candle, and that was the IPB signal. And that occurred, it looks like around 10:15. If we go back to this screen, let's see if it's on here or not. It might have scrolled off the page. Yeah, it looks like it did. Oh no, it's there. What is this, Tilray? Yeah, there it is right here. So you see here Tilray, T-L-R-Y, and see it says 10:18. All right, so if we go look at the chart, and right here, you can sort of eyeball it. That's about 10:18 this morning. So that's the algorithm doing the work for you, because there's too much going on. We need the computer to help us. 30 years ago, I didn't need the computer to help me so much because most investors weren't using technology. Now it's a very competitive market. We have to be ahead of what most people are doing. If we have tools that give us an edge, we can beat the other traders in the market to the stock and have a higher success rate and higher profitability. That's where these tools come in. So the Stockscores hit and run. Another strategy that you tend to do fairly early in the upward trend. Many of my students do this. I don't do this a lot. I tend to do more the early risers and IPBs, but not because this is bad. It's just I have a preference. And this is essentially using an area on the dashboard called the H&R Finder. I'll show you that in just a moment. We're looking for stocks that are trading with abnormal volume, and then we look for a short pause in the upward trend followed by a message candle breaking to a new high in that trend. That's the basic idea of it. So if I go to here, you can see right here is H&R. That means hit and run. And anytime there is a hit and run candle, potentially, it'll give an alert and show a time there. You can see there's lots of them. And that's maybe the reason I don't love this, because you get a lot of signals and it's a lot of work. It's a great strategy, but it's more a strategy maybe for the opening hour or the first half an hour of a stock's trend. Now, if we look at an example, here's one from today. This is 23andMe, which is actually a company going bankrupt, and yet their stock doubled today. That's kind of interesting. 23andMe, the DNA testing company, they're apparently in bankruptcy protection, but their stock was a great trader today. So you can see that the stock was boring, and then it came alive here. See the pink and yellow dots, and the volume starts to increase. So now we know the crowd is coming in. And right there, this is the pink dot that I like. That's my message candle. And it did so after a short little pause, a very short little pause, followed by a message candle. So that's the hit and run setup. Now, again, let's talk in risk reward terms, because this is the mindset that I want you to think about. You're buying here. This is 1 times risk. This is 2 times risk. 3, 4, 5. Closes above 5, so I have my stop at the 4th line. So this one also made +4. So we had MLGO example, do 4RR. This one also did 4. So that's 8 so far, okay? Now the superheroes. We're typically entering these on the 1-minute chart. We can do these all day. They tend to come later in the day, like after the opening hour. Sometimes they'll come sooner, but most of them are after the opening hour. So it's for someone that can trade the market through most of the day. We're going to utilize the IPB finder, the liquid movers screen on our screen to identify these. They'll usually show up in here as well. The only difference is that it's a little different pattern. I'm going to show you the pattern in a moment. I'll often watch, these stocks for superheroes as well. They'll sometimes show up over here because they're making a message candle. So there's lots of different screens on here. And the reason why is because my approach to finding things is sort of a Swiss cheese approach. Every aspect of my approach, every little tactic that I have has some little holes in it. And if I have multiple tactics, try to find the stocks that are moving, it's like Swiss cheese. Each one has some holes in it, but when you layer them on top of one another, you cover up all the holes. And so the reason we have this screen and this screen and this screen, they're all kind of doing the same thing, just in different ways. But the idea here is, yeah, each one's got some flaws, but together, all of them, we will find just about every stock that makes a big move through the day, and we'll find them early. So here's an example of a superhero. So once a stock is abnormal, this is 23andMe again. Once a stock is abnormal, this is a 10-second chart, so it's very short term. This stock had made a big run up in the morning, and then it was kind of going sideways through the lunch hour. And it was going quietly sideways, and then it made this action candle right there. And you see how the volume spikes up again? So that's a superhero setup. It's once a stock is abnormal, it gets quiet, and then it makes my action candle break from low volatility, from optimism. This is exactly what we talked about last night in the investor session, where we were talking about buying a stock to hold for the next 6 months. Here we're talking about a trade where we're going to hold it for the next 6 minutes. Same concepts, same indicators, just applied to a different chart time frame. Now, what did this earn? 1 RR, 2 RR, 3 would have sold here plus 2. Okay, so we've had a 4, a 4, and a 2. Stockscores simple swing. Now, this is one of my swing trading strategies. So for those that have less time for the market, maybe you can only look at the market for the opening hour, maybe even only the opening half an hour. This is a good strategy for you. Someone who can watch the market fairly closely for the first part of the day and then maybe monitor their holdings from a cell phone or from a laptop or an iPad while they're doing their normal job. You don't have to monitor them that closely, but oftentimes I'll take a swing trade and just sort of keep an eye on it from my phone, where I can get some real-time quotes from either the CNBC website or, for me, the TradeStation mobile app works. This is a good strategy it's more of a passive active trader. And so we're typically in and out within a few days. I say here exit within 3 weeks of entry, but it's pretty rare that we hold them that long. It's usually 3 to 5 days. Most entry signals in the opening hour or the final hour, and it utilizes the swing finder in our dashboard. So if we go to our dashboard, I screwed this up again. Sorry, just got to get to where I was here. Superheroes, simple swing. Okay. I'll show you an example in a moment where it has the simple swing. The next swing trading strategy I want to talk about is the Alpha Echo. This is my preferred swing trading strategy. This happens with stocks that come alive with abnormality, and then they quiet down for a few days, and then they start up again. So MLGO did this today. So here is the chart. Oh, first of all, here's the screen. So this is our swing trading window right here, and it's telling me all of these stocks that are making action candles on the 13-minute chart. So we look at this, you can see that MLGO right here made a 13-minute action candle at 9:43 this morning. At the time that I did this screen capture, that stock was up 1.9 times risk, 1.9 times RR. The maximum RR through the day was 5.3. Okay, so in other words, it went up and then it came back down a little bit. I'm going to show you the chart. So there's that 9:43 candle. It went all the way up to as much as 5.3 times risk. And then it came back, and when I did this, it was at about 2 times risk. Now, it did a simple swing back here as well 3 days ago. So this is when it started to have alpha, back on the 24th. And then it quieted down for 2 days, and then it came alive again today. See the volume coming back in? volume had been falling off, and then it came alive at 9:43, little spike of volume, little abnormal price action. If that chart was in front of you, if you were looking at that chart at that moment, you would say, hey, I see that something's going on. But how are you going to look at 10,000 charts at once? You can't do it, right? That's why we have the dashboard, because it's going to go through the entire market and it's going to spit out the stocks that are making the 13-minute action candle. And there were at 9:43, there was, I don't know, maybe 15 that did it. And then I go through each of these 15 looking for the right pattern. MLGO had a pretty good pattern for the Alpha Echo strategy. And so you can see over here, see where it says type 3? So this is something that I made a list of for my active trader students or subscribers. I wrote that, or I punched that in there at 9:43. I said MLGO is a type 3. A type 3 is another name for Alpha Echo. A type 1 or a type 2 is for the Stockscores simple. Okay, so what do you need to be able to do this? Well, we've talked about sort of the strategy concept, this idea of abnormal activity. We've talked about the importance of risk-reward lines, about taking a loss when you're wrong. If the stock goes down through your stop loss point, you get out, you don't take big losses. But you also need the strategy rules, and that's where we talk about the knowledge. Now, you need to know some stock market basics, and so I can teach you those things, but that's kind of the boring stuff. How to analyze a stock. You know, on Tuesday, we did a lesson on how to analyze a stock in seconds. I've got in-depth videos and lessons on how to do that. On Tuesday, we did a 1-hour lesson, but it's kind of the overview. We go into much more specific detail about how to analyze a stock quickly. It takes practice. When people start out, they take a minute to analyze a chart. After a month, they take 20 seconds. After 35 years, I can do it in 2 or 3 seconds. You just look at it and you know whether it's right or wrong. Most people will get up to speed in a month, where you can do it pretty quickly. We talk about risk management. Big part of trading effectively is risk management. If you can't limit the size of your losses, don't ever trade the stock market, because you will blow up. In a hot market, you'll do fine. But when the market starts to go sour, you'll give back all your profits. Risk management is essential. That's what gets you through the bad markets as well as the good markets. Having good money management, limiting the size of your losses, taking position sizes that reflect your risk tolerance. That's a big part of what I teach as well. How to develop a strategy. I'll teach you how to do that. Most people don't like to do that. I love to do it. That's probably my favorite part of trading. And so I develop the strategies for you. But if you're interested in doing that, I've got some lessons on how to do that as well. The mechanics of trading, how to actually get the order entered, how to do it quickly. If you're a day trader, having things like hotkeys is going to allow you to get your trades entered much more quickly than clicking on a mouse. If I want to buy 1,000 shares, I have a keystroke. Actually, I don't even have a keystroke. I have a little button on a thing on my desk it's called a what is it called? A Stream Deck by Elgato. So the gamers use it and streamers use it, but I've set it up for trading as well. So if I want to buy 1,000 shares, I just hit a button on my Stream Deck and I buy 1,000 shares in less than a second. I want to sell those 1,000 shares. I hit another button, sell 1,000, gone. So I don't have to sit there and type in 1,000, the symbol. It's just much, much quicker. You don't need that for swing trading. You don't need that for investing, but it sure helps for day trading. And those are things that I can help you get set up as well. Now you need strategies. So the rules for when to enter, when to exit, how to size positions and manage risk. These are all things that I can teach you. They're all in the lessons. I'm going to show you the Education Center in a moment. My strategies are well tested. I trade them myself. I understand the reason behind them. I think it's important to understand the theory behind it, not just to say, I will buy when action candle breaks red line. No, you need to understand why that's working. What's the market dynamic behind that? Now, we use statistical analysis to evaluate a strategy. So this is one of my spreadsheets. This particular spreadsheet probably has 30, 40,000 trade examples generated from a year of testing, where I put all these trades into a big spreadsheet, and I can start to test for the values of different indicators. So in this, you'll see things like VSIG and PSIG. That means volume significance, price significance, the float of the stock, drawdowns. There's all kinds of of factors that go into testing these strategies. So just trust that when I teach you a strategy like the day trader strategy, and I give you the rules, that doesn't come without a ton of testing, thousands of hours really. And when you think about what I charge for my courses and memberships, it is so cheap compared to the work and the programming time and the tools that have gone into it. It's a real bargain. We're really spreading the cost of all that research and development and tool development over the students that I have each year. Here's another excerpt from that. This is where we test for different values of indicators, and we do what-if analysis. And so I'll vary these different things, and then it spits out what the average RR is for each trade using these values. And we can do what-if analysis and testing to get to the best performance. Now, you also need tools. So if you are an investor and you want to use my tools, that's the Stockscores website. If you want to be a trader, day trader or swing trader, then you're going to use either the Active Live service or TradeStation, some other real-time charting program, or maybe a combination of those. I use TradeStation primarily for day trading, and I stream my picks, not really my picks, my analysis through the Active Live daily webinar. We will do post-trade analytics where we drop trades into a spreadsheet. We download that spreadsheet every day in Active Live. And you need tools for order entry. That's your broker. You need to be with a broker where you can trade fairly quickly if you are a day or swing trader. If you're a position trader, you can have a broker with a bank, doesn't matter. But if you're a more active day trader, you need to be with a more specialized broker for that. There are a number of brokers that do that. I use a broker called Interactive Brokers. TradeStation is a broker that you can consider in the US. There's brokers like, Robinhood is not a great broker for day trading. It's free. They say that the commissions are free, but it's not. Nothing is ever free. You don't get as quick of an order fill because they're getting paid for order flow and they're selling it to a market maker. So there's issues around that. Those are all things that I can help you with if you're one of my students. So what do you need? You also need process, a step-by-step plan for implementing the trading strategy. It should be mechanical, efficient, and remove emotion. So the process for me typically is I start the day looking at the market factor. Is the market helping or hindering today? It'll just help me determine how aggressive I'm going to be on the exits mostly, and also how fussy I'm going to be on the entries. We're looking for action candles if it's the particular strategy where action candles are important. Once we see an action candle, we look for satisfaction of the other rules. We enter the trade. We monitor for an exit signal, typically put in a stop loss order. We monitor the market if the change of focus is different. That's not so important these days. That was more important a few years ago when we were trading the day trader strategy more so, as opposed to now where we're more early risers and intraday pullbacks. And Active Trader Live automates a lot of this for you. So it's doing the analysis. I've got really powerful computers that are doing that analysis so that you don't have to do it. You can just watch the signals and then pull up the charts of the stocks that make the signals for the strategy you are focused on. I teach you what to look for. You got to practice. It doesn't happen overnight. I don't want anyone to think that it's, you'll be up and making $100,000 a month in the first week. It takes time. But I'm here to support you and coach you through that process. You just have to put in the effort and listen to what I tell you. What you need capital, of course. Now, I'm often asked, how much capital do I need to become a day trader, to make a business of it? I'm going to show you the math of that in just a minute. But if you have $10 million to trade with, I want you to start with the same amount that a person with $5,000 has. I want you to start with $0. You have to practice on paper, practice trading first, get good at it first before you risk real money. Why would you want to risk real capital when you're learning? Now, there is a benefit to trading with real money because it's real. That's where your emotions get involved. But even then, have a very small risk tolerance where your risk tolerance might be $25 a trade, $50 a trade, just a very small amount so that when you make mistakes, and I guarantee that almost everyone will make mistakes when they start out, your mistakes don't cost you a lot. If you're paper trading, they cost you nothing but your time. And if you're trading with a very small risk amount, your mistakes aren't going to cost you a lot either. So it's really important to take that very slow approach. So start with $0 of risk. You can practice at my website, tradescores.com. We have a simulator on there, but it's honestly, it's easier just to punch the trades into Excel or even just write them down on a piece of paper and just keep track of your performance while you practice. As you get successful, increase your risk. And this is what I'm going to show you in a moment. I'm going to show you the path to $100,000 a month, but it's using this gradual, step-by-step process where you only increase your risk with success. If you're losing money, you decrease your risk to zero so that you're only losing money on paper. Our number one goal as traders is capital preservation, okay, above all else. So promise me, promise yourself that you're not going to trade with money you can't afford to lose. You're going to start with $0 of risk and practice. As you get successful, now you'll have some confidence, you'll have some experience, and you can start with a little bit of risk. And you're going to make a certain amount of money at that level, 10 times risk ideally, and you're going to increase a little bit. And again, I'm going to walk you through a process in just a moment. What will help you succeed? One of my favorite sayings is trading is simple, but it's not easy. Anyone can do it, but it takes practice, focus, determination, discipline. I can give you all the things that I've learned from the last 35 years. I can give you the tools. I can give you the little algorithm dots on the screen. But if you don't practice, if you don't have the focus, determination, and discipline, it's like anything else. If you want to, build muscle, you got to go to the gym and do the work. If you want to become a good skier, you got to go and practice. If you want to be a good chess player, you got to read the books and study and practice and play, and you're going to get better. There's no different with trading. I don't want you to be a gambler. I want you to follow a strategy. I want you to prove to yourself first and foremost that it works. I'll give you the rules. I'll show you how it works, but then believe in it. You got to practice it so you say, you know what, this actually does work. I see that this guy's not an idiot. It's working. And so then you can start to believe in it, have confidence, build your experience, start with a small amount of risk and slowly increase that risk. So if you want to be an active trader, the way that I did it is I developed and tested the strategies myself. This is what I did. It took me 8 years. Okay, I started with $3,000 that I borrowed from my credit card. At one point, I took $30,000. I built my capital up to $30,000. And I turned that $30,000 into $500,000 in 3 months. And that's sort of where I got my start. And then I started building all these tools, which were very expensive to build. And they gave me an edge. And now 35 years later, still trading. The Stockscores Education Center is where you will learn the lessons. Okay, I'm going to show this in greater detail on Saturday. So make sure you're registered for Saturday's webinar. It's 9 a.m. Pacific time. We'll go for an hour. I'm going to walk you through the Education Center. I showed it last night as well. Tonight, because we're kind of getting on in time, I'm not going to go through it, but I'll go through it in detail on Saturday. In that Education Center are the investor and active trader lessons. And again, I'll show those on Saturday. So you have 2 courses that you can take. The investor course is for people that want to manage their retirement portfolio, be a position trader where you're holding for, typically weeks or months. And if that's what you want to do, the investor course is right for you. If you have more of an interest in active trading, whether it's day trading or swing trading, and you still want to invest as well, then the active trader course is the right one for you. The active trader course includes everything in the investor course, but it also includes my indicators for TradeStation. It makes you eligible for Active Live. It gives you my active trading strategies, and of course my support as you go on your learning process. Now, the Stockscores Mentorship is another option. If you would like me to hold your hand through the learning process over the next 6 weeks, starting Tuesday, April 15th, we are going to do 2 classes a week. First week we do 1, and then we do 2 a week. There's going to be 12 classes, each one's about an hour, and I'm just going to walk you through it. It's all the same information that's in the Education Center, but people really find value in me doing lessons like this And because I only have 15 students in this mentorship program at once, I can, take more time to answer questions, and, we can take 2 hours if it's necessary for that particular lesson to make sure everyone understands it. It's a great way to learn, but it is limited to 15 students. So I will be opening up registration for the mentorship program on Saturday after the Saturday webinar. So at 10 o'clock, we'll open that up, and the first 15 people can register for that. It pretty much always sells out, and everyone that takes it always gives me great positive feedback on how useful it was for them to learn. I think it'll get you up and running quicker. Not to say that you can't learn all this stuff doing it on your own. Some people just like to have that sort of guided learning process, and that's what the mentorship program is all about. So here's a little feedback on the mentorship course. I'll leave this up just for a second. It's a lot of words, so if you want to read this in detail, I recommend just checking out the video, which I will post on YouTube later tonight in a couple hours. So we'll pass on that. Now, Active Live is a service that I run every day where I have my computer running the analysis. So that's what this screen is right here. Okay, this is Active Live. And during the trading day, this is blinking and there's lots of things going on that screen. For the opening half an hour, I come on and I guide you through the opening half an hour because that's the most challenging time of the day. At the end of the day, for the last half an hour, participants submit their trades to me and I give them feedback on whether they follow the rules properly. 4 to 6 times a month, I do an extra 1-hour coaching session, typically in the morning, where I just spend that much more time guiding you through the day. This is not a service where I tell you when to buy and when to sell. I teach you when to buy and when to sell. I want you to be independent. But in the process of teaching you when to buy and sell, I'm going to tell you a few times where there's an actual buy signal, where there's a sell signal. I try to do that every day on a few examples. But again, my goal is to make you self-sufficient. I don't want, I want people to be able to do this on their own, and that's what this is all about. Okay, so twice a year, I do live training to complement the online training. So that's what this is coming up here, April 7th. So anyone who registers before April 4th, which is Friday next week, will get this for free. We're going to do 2 overview classes on Monday and Tuesday, the 7th and 8th, hour and a half each. I'm just going to walk you through the theory. And then on Wednesday, Thursday, Friday, we're going to do market scans. This is targeted at investing, at position trading. You also, if you take the Active Trader course, you're going to get a free month of Active Live. We're going to get those coaching sessions. You're going to be able to watch my screen. You're going to be able to ask questions during the trading day, have me review your trades at the end of the day. It's all part of that, and you get a free month of that. All of the classes for that week from 7th till the 11th, they're going to be recorded. So if you miss one, you can watch it later. I don't record the Active Live sessions because it slows the computer down too much. However, you're welcome to record them on your side. There's software out there where you can just record whatever's happening on your computer, and I can help you get that set up as well. So the special offer, anyone who registers before Friday, April 4th at 11 p.m. Pacific time will get the overview and strategy application series for free, and you'll get a free month of Active Live. If you register for the mentorship, you get another free month of Active Live. So you can potentially get 2 free months of Active Live. Active Live is normally $245 a month Canadian. Here's the price of the course, the membership. You cannot use my tools, you cannot use my indicators unless you first become a member. Here's the reason why. First reason is I've spent thousands and thousands of dollars developing my indicators for TradeStation. I've spent hundreds of thousands of dollars building the market scan tool on Stockscores, and I don't want to have a lot of students. This is like, not really my hobby, but I don't have a lot of staff. I have programmer staff, but in terms of teaching, it's all me. I don't want to have a bunch of people teaching for me. I don't want to have more than 100 students a year. In order to cover the cost of all these tools that I've created, you have to pay to get in there, right? And in doing so, it makes it exclusive, because if I sold this to thousands of people, I don't think it would work very well anymore, because we're all chasing the same stocks. So by only teaching 100 people a year, which is really 50 people at a time because I do this twice a year. It's a small number of students, small number of people using the tools, and it doesn't take away the opportunities. We're trading stocks that are very liquid. And so when we all see the same signal, we can get in and get out without moving the market. If I had 1,000 people in my webinar every day, that wouldn't work. And there are people out there who are in the business of selling courses and that's their sole objective. And they have thousands of students. I don't know how these people make any money when they're all trying to do the same thing at the same time on the same stocks. I don't want to get into that world. So discount codes. We all love a discount. So right now, if you go to the website, you'll see the prices, $29.95. And again, I want to emphasize this is Canadian dollars. So many of you are here from the US or Europe. So our Canadian dollar is pretty weak right now. So it makes it quite a bit cheaper for you guys. But you can also get $500 off. Here's the discount codes. And so you can get $500 off using those discount codes. If you want to register, go to this URL, stockscores.com/learn, or even easier, just go to the Stockscores website, go to Trader Training, learn how to trade, and just go down the page here, and you can register right there. See, it says Order Active Trader, so you can do that right there. Once you're registered, you will get a couple of emails from us, and you'll be also registered for the webinars that start April 7th. You'll get a bunch of emails about that. Now, before we move on, as I said last night and on Tuesday night, I'm not one for doing pushy marketing. So I am going to ask you if you would like a follow-up email on Sunday with a little more detail about the courses. Again, those discount codes will be in there. If you want a little more information on that, just say yes or no to this, and I'll put you on my list. If you've already answered this, you don't need to do it again. But if you haven't answered yet because you didn't attend these presentations live, now's your chance, and then we'll get you on the list. And you'll get an email on Sunday and maybe a couple the following week with some more details. Okay, I'll leave this up for another second or so, and I'll just look at some questions here. I'm using TradingView Pro membership and Interactive Brokers. Is that good? Yeah, it's pretty good. I mean, I think TradeStation is better than TradingView. We have TradingView charts on our website, and they're good. The only problem is we can't plot our action candles on them. So I think when you're learning, stick with what you got, but I think you'll make more money with TradeStation. Now, TradeStation, because I'm a Canadian, I have to pay for it. We can't get it for free here in Canada, or we can't have a brokerage account with them in Canada. So for me, I have to subscribe to TradeStation. It costs me $79 US a month, plus the exchange fees. Exchange fees are not meaningful, maybe like $10 a month. Okay, I'm going to close down the poll. Now, there's been a lot of questions, so I have to scroll up here. And let me just remind you, we've got one more webinar coming up Saturday. So that webinar on Saturday, you can, we were going to spend all this time about how to get to 100 grand. I almost forgot. I'll answer questions in a minute. This is the fun part. So how do you get to $100,000 of profit in a month? It's all about consistency. All right. So earlier in the presentation, I talked about sort of a win-loss ratio and understanding reward for risk. And as we've been going through the presentation, I've been showing you the reward for risk on some trades that we found today. All right. And so we had a couple that were +4 and one that was +2, and there was a couple more today as well. Let's just say that you only found one of those or two of those, and your RR for the day was 4 or 5. And let's say your risk tolerance, because you've been practicing for a while, you've already been paper trading for a while, your risk tolerance is now at $100. So $100 and you earned 5 RR, that means you made $500 today, right? If your risk was $50 and you made 5 RR, then you made $250 today. All right. If you can be right 70% of the time, and let's say your average profit is double your average loss. So let's say your average profit is $200 and your average loss is $100. So if you do 3 trades, let's say, and you have 2 winners and 1 loser, that's not even 70%. That's a 66% success rate. 2 winners, 1 loser. 2 winners made 2 RR each, that's +4, and 1 loser lost you 1. So that's -1. So after 3 trades, you made +3. Okay, this is the mindset that I want you to get into. Don't think in terms of, oh, I made $600 today. Oh, I made $4,000 today. Oh, I lost $1,000 today. Take that out of your mind, because we have an emotional attachment to money. You have to turn that kind of thinking off. So instead, I want you to think in terms of reward for risk, because good traders earn a good reward for risk ratio. If they risk 100, they're trying to make 200, 300. It is dumb to risk $100 to make 50. It's dumb to risk $1,000 to make $200, right? So we have to think in reward for risk. So as I was going through today, I showed you a bunch of trades. I think they added up to plus 10. But let's just say that you could consistently make plus 5 a day. And I can tell you that there's more than enough opportunity to do that. Some days you'll make plus 10, some days you'll lose minus 2. But on average, if you can make plus 5 because you're consistent, then you can really get to where we want to go. And I'm going to show you how in just a minute. So how do you do this? Have small losses, have bigger profits, and be consistent. So let's just look at another example. So if we use this as our entry point, our risk is this much, and our reward is this. So if we sold right here, we made 1 times risk, 2 times risk, 3 times risk, 4 times risk. So this is plus 4. These days, I'm happy to make plus 2 on trades. I try to make plus 2 3 times a day. That's plus 6 a day. That's my goal right now because the market's a bit soft the last few weeks. So now, how is that going to work? Well, we're going to jump into this spreadsheet here. Let's say you start, and again, I want to emphasize you've been paper trading, you've been doing well on paper, now you're ready to start trading. Let's say you have $10,000 of capital. And you're going to risk no more than 2% on one trade. Now, I think in Canadian dollars because I'm Canadian, so I'm going to say this is $10,000 Canadian. So my risk is going to be $200 Canadian per trade, which is 2% of my total. It's a very good number for the type of stocks we trade, where you can get 2, 3, 4 RR out of a trade. That means my US dollar risk is $141. All I did here was take $200 and divide by 1.42 because that's about the exchange rate right now on the US to Canadian dollar. So that's my US dollar risk tolerance. All right, my goal is 5 a day. That's 25 RR per week. At $200 of risk per trade, that's $5,000 per week. You might say, well, that's a 50% gain. How can that be possible? Trust me, there's trades every day that earn 2, 3, 4 RR. Some days there's trades that earn 10, but let's just be very conservative and try to get 2 RR 3 times a day, maybe have a loser in there, try to make 5 a day. All right? So that's 25 a week, that's $5,000. That means after the first week, you've got $15,000 of capital. Now remember, we're going to always risk 2% of our capital. That means in the second week, our risk tolerance is now increased to 300. Now, if we lost money, our risk tolerance is going to go down. This is a safety net. It's going to stop us from, risking too much. So that means on the second week, if we earn 25 times $300, that's a $7,500 profit. Now our capital is 22.5. And then the next week, it's 33.5, and so on and so forth. And here is the profit per week. And you can see, if we were to start next week, and you're not ready to start, let me emphasize that. You haven't practiced yet. You haven't done the course yet. So this, you got some work to do first. But you get to that point where you can be consistent and earn 25 a week, you can get there by the end of May. But let's say 25 is not realistic for you. Let's say you can only do 2 a day. You're learning, you're not experienced yet. Okay, no problem. 2 a day is 10 a week. And your maximum risk is $1,000. That means it just grows a little slower. At the end of the first week, you've made $2,000. That's $12,000 of capital. Now next week, you're risking at $240. At the end of the week, you've made 10 times risk, $2,400. Now, if you had a bad week and you lost, then you're going to lower your risk tolerance. So our risk tolerance is always reflective of our capital. And if we're losing money, we're going to scale back our risk. And if you consistently lose, then you're doing something wrong and you need to go back to paper trading and ask me for help. One of the great things that I can provide to you as your teacher is to give you that support and help. And so if ever you're not doing well, you're probably doing something wrong. We got to figure out what and get you on track. What do people typically do wrong? They lack discipline. They have the fear of missing out. They lack focus. Sometimes they don't understand the rules properly, but not usually, actually. Usually the rules are the easy part. It's following the rules, having the discipline, the focus, emotional control to do that. But if you can be consistent, you can see the power of that here. Here's another trade from today, just again to emphasize the risk reward. This was an IPB, intraday pullback. So you have the move up, the pullback, 2 inflection points. See the pink dot right there? Stock moved up. This was +4 RR in maybe half an hour. All right. So there's another one from today. So there's the summary. There's your discount codes. And again, the deadline to use the discount and to get the free training is next Friday. So you got some time to read through things. Maybe read the free copy of my book, which you'll get emailed to you as a ebook. So you can watch that if you want. Watch videos on my YouTube channel. Do your due diligence. I've been around for a long time. I've been teaching for 25 years. Students that I have from 25 years ago are still using my tools today. In fact, I just spoke to one this afternoon. So, and one of my original students. So it's definitely, if you stick with it, you can have a very nice life. And on Saturday, I'll share some testimonials from people that have been around for a long time. Okay, so we've gone way over time. I'm going to just try to skim some questions. Are there any techniques that you do to keep your emotions in control? Breathing exercises or something else? Absolutely, yeah. Breathing is super important. So when we get stressed, we tend to have shallow exhalations. And if you are aware of that, you can do box breathing, 4 seconds in, hold 4 seconds, out 4 seconds, hold 4 seconds. That helps. That's what Navy SEALs do when they're in stressful situations. So I actually talk about that in my webinars every day, that kind of thing. If your system is mechanical or algorithm-based, then why not have AI do the investing? It's 90% mechanical, but we still have to make a judgment call. I've tried to do it completely algorithmically, and it wasn't as good enough as if I used my human judgment. How much cash to invest would you suggest a person have to replace a $100,000 salary? Well, I just went through that exercise. So I want you to start with zero, practice. Then start with $5,000 and $50 of risk per trade or $100 of risk per trade. Get successful. Then you can bump it up. I started with $3,000 when I was 19 years old. All right, there's so many questions. And how can I email you directly? My email address, it's not here. I will show you my email address. If you have questions, you can email me at, there it is, tylerb@stockscores.com. And that goes directly to me. I'm colorblind. Is there a way to trade without the colored dots? Yeah, you can change it to grayscale. I have a few students that are colorblind. So on our Stockscores charts, we actually have a grayscale option. And you can set up your charts with grayscale. You can set the color of your action candles to whatever color you want. I've set mine to pink and yellow, but I know for colorblind people, red and green are very hard to differentiate. So certainly you can do that. Do I execute trades through TradeStation? I don't. I wish I could, but because I'm Canadian, we're not allowed to have brokerage accounts with US brokers. So I have to analyze with TradeStation, and I have to execute my trades through my broker, which I use Interactive Brokers. I have a lot of NVIDIA shares. How I'm down 15% with it, and currently it is on a bearish trend. Should I sell to stop my losses to invest in something else, or hold and wait for a recovery? It's hard for me to answer that because I don't know what your risk tolerance is. If all I can do is evaluate the chart for you, so I will look at this right now, NVDA, and right now in the daily time frame, the tops are falling, right? And you've got support here. Until we break this downward trend line, I think the stock is more likely to go lower than higher. If it breaks down through 105, that's going to make me nervous that it's going down to here. So for now, if we go to the intraday chart, so I go to the 15-day chart here, you can see that we had a bit of a breakdown today, this little upward trend. This is the 1 hour chart. So that was a bit of a breakdown. That's a sell signal in the short term. I don't think the stock looks terrible, but I think there's probably better places for the capital. So you have to make that evaluation on your own. I can't tell people what to do with their money, but I can analyze charts for you all day long. That's my analysis. Is E-Trade okay for active day trading? I'm not too familiar with E-Trade, again, because I'm in Canada. It's probably pretty good, but I think there's probably better choices in the US. Interactive Brokers is decent. There's a broker called Lightspeed that's pretty good. There's TradeStation, Charles Schwab. Those are all other options. So, all right, I think I'm going to wrap it up because you might tell that I'm losing my voice. So I will end the presentation here. I hope you enjoyed it. I hope you can join me on Saturday. I'll walk you through the Education Center. I'll show you a little bit more about our tools and things like that, and answer a lot more questions about the courses, go into a little more detail about the courses as well. So if you have an interest in that, make sure you're on the webinar on Saturday. You can register at stockscores.com, and I will send out an email Sunday for those who have expressed an interest. If you haven't expressed an interest because you're watching this as a video, then you can do that on Saturday, and I'll put you on the list for the email as well. All right, hope you've enjoyed it, and as always, trade well.